So this is a Zoidberg, went too far there. So the reason I've got potential, patience, and persistence is because this is what you need to win in trading and investing. If you don't have patience and persistence, you might as well just stop. Just don't waste your time. Okay, cool. So last week we covered the difference between long holds, of the true difference it makes of holding for a long time versus getting in and out of your trades. And we saw that the return difference of getting in and out of your trades versus holding over a 5-year period can equal to around 2,000%. So you probably don't want to get in and out of trades. You probably want to just find some things that you hold for the long term. So when we're looking at something for the long term, what is long-term view? That is looking at something on the 5-year chart or the yearly chart. It's not a long-term view if you're not looking at it on more than a year. Now, what we have is we have the medium swing. So this is this period of time. So this is, if say for example, this is the 5-year chart, a medium swing low, this is like 2 to 3 years of action, which is, this is the Bitcoin chart, by the way. And then a short swing would be a year in that time period or a few months in that time period, if you ever hear that terminology. Now, what causes these swings is the different phases of the market of a stock. So you have the accumulation phase. This is where the people that have been doing their research on it before it's pre-IPO or before its initial coin offering, they're doing their research, trying to figure out what's going on with it. They're the ones in the know, doing the research, getting in early. This is the accumulation phase. Now, when it becomes public and it becomes a little bit more mainstream, which is similar to what's happening with Bitcoin, although, again, like we noted last week, the Bitcoin Google searches is nowhere near what it was at 2017. So it's not the public buying up the Bitcoin. It's actually the big scale investors. So that's the absorption phase, which is what happens here, where you have the biggest amount of gains going. Now, then you have the distribution phase, and this is where early investors tend to get out and take their profits. So they won't get out completely, but they will take some profit, then get back in at a later point. And this is why from there, a stock or a crypto will go up and down, depending on new features and earnings reports. Okay, cool. So the first thing in looking at a chart is really understanding this here. This is probably one of the most important things you can understand, is understanding what a support level is. So I'm going to show you this in a second on the chart. Now, a support level is the bottom of a chart where it keeps hitting the same price. So I'm going to use this blue dot as a bouncy ball. So let's say this is the price. And again, you want to do this on the long-term view first, on the 5-year, then the 1 year, then the monthly, then the daily view, just so you've got it marked up so you can actually see the story of what's actually happening. So the price comes down, and let's say this is £1,000, right? And then it came up, and then it got down to £1,000 again, but it bounced straight back up. That would be a support level. Now, resistance, let's say right now we're facing a resistance of the 50K resistance. The price would come up, hit 50K, come down, hit 50K again, and then come down. Now, at this point, when it comes to a resistance, what we can have is called a breakout. So a breakout is where it breaks above the resistance level. And because everyone's looking at the same chart and seeing that it's broken above a resistance level, guess what happens? Shitloads of people put money in and boom. So if you can spot a resistance level that looks like it's got good momentum behind it for it to break it, that is an ideal buy point. Or getting a buy off the base of a support, because if it's base dropped off the support once and then twice, and then you see an indication of it moving up, what you want to do is you want to get it past this point here and then ride it all the way up. Cool. So next is understanding candles. So you'll probably see candles all the time, and people always ask me to break down what the candles are and how they work. Let me just hide this. Okay, so let's break down these candles. So the candle opening price, so you got the different colors first. So you got your green and your red. So your candle represents the time frame. So let's say, for example, we was looking at this on the daily. This would mean that in a day, the price opened here and closed here. However, during that day, the price went up to here and then closed here. So let's say that this is a candle on a day that represents, let's go actually even better. This is a monthly candle. So we're looking at the Bitcoin on a monthly. And let's say this bottom here is 20,000. This is 30,000. This is 40,000. This is 50,000. So it would mean that it opened the start of the month at 20,000. It went up to 50,000, but it closed at 40,000. And in that same month, it also went down, but also closed at 40,000. Hope that's making sense. So that could be how you'd read it on a monthly, but it's also the exact same way that you would read it on a daily. So it would mean in that day, the price opened here, it went all the way up here, it also went all the way down here, but it closed that day here. Okay, cool. So next is your moving averages. So your moving averages tell you different, give you different context on the average price within that time zone. So let's say, for example, we're looking at the moving average for the one that's the most popular is the 200-day moving average. And this is because it gives you the big long term. So this is why people tend to sell if the price goes below the 200-day moving average. You will get it's almost guaranteed. If the price goes below 200-day moving average, it's going down. If it goes above the 200-day moving average after a retracement or a pullback, it's very likely that it's going to fly up. Now, then you have your medium moving average, which is for your kind of 10 days to 3 months period. But you can get that on the 90-day moving average, on the medium one. So this is the 50-day moving average you'd look at for medium term. And then for short term, you look at the 20-day moving average. Cool. And again, I'll go over that with anyone that wants me to go over it with them. Okay, so cool. So now is you chart patterns. So there is tons of chart patterns. These are just the most popular ones. There's probably about 100 and odd chart patterns, but you don't need to learn them all. You only want to learn the ones that are the most common. So the ones that are the most common are a flag, a double bottom, a double top. That's pretty much it, really. Ascending triangle is pretty obvious to see. And then you also have head and shoulders, but that's a bit more advanced. And you also have cup and handle, which is slightly more advanced, but it'll make a bit more sense in a second. So a bull flag is basically where the prices come up, but this is where people have sold. So what's happened is people have got in here, price has gone up, people have sold and taken profits, and now the price is going down because the sellers are actually now making more money because people are selling their position. And then people are like, oh, it's gone down to the price that I wanted to buy it at. So then it goes back up. Very similar to a bull pennant and very similar to a measured move up. Next is our cup and handle. So if you remember what we spoke about the support and resistances, just imagine the support along the bottom and then the resistance just along the top. So you can see these two peaks are more or less the same at the same point. Just where it peaks over, that's where people are taking their profit because it's a breakout pattern. So it's broken above this new price. And that's normally on the highest high. Then we've got our rising valleys, our symmetrical triangles and our ascending triangles. Now these are basically just bounces on a trend line. I refer to my symmetrical triangles and my ascending triangles and the rising valleys the same way that I refer to my double bottoms. So a double bottom is just 2 touches or more. 3 touches along the bottom is a triple bottom on either the trend line or the support line. So you can see, let's say, for example, again, the price hit 10K, went up to 30K, came down, hit 10K again, went up, and then broke out of the resistance and actually went past 30K. So that's how you spot a double bottom. Cool. Then you've got some candle patterns. So candle patterns, in terms of, again, you don't need to learn all of them. The main ones that I would learn are the ones that indicate momentum. So what does it mean by they indicate momentum? Is my ones are that I look for is a shooting star and a hammer and dojis. So those are the main three that I look for. And then also black crows and three white soldiers. So I just call them stairways to heaven or stairways to hell. Quite obvious. So just basically stairways to hell and a gravestone doji with a hammer. So basically just think it this way. If the hammer is hitting the crows, then you're going to end up in your grave. So these are the three candle patterns that you need to look out for. If you see these, that's a big sell-off. That means a lot of people are selling, and the price just isn't coming your way. Now, the exact opposite can also happen. So you can see here, this would mean that the price opened here, went all the way down, but then it supported itself and it just stayed at the top. Cool. Okay, cool. Altcoins. Let's talk about these altcoins. And then I'm going to open up the mics in a bit.